no, Bitcoin has quietly rallied to $74,000, and it seems like not that many people are noticing, increasing by 8.5%, having its best week since September of 2025. It's been a very long time. So I forgot how the pumps feel, right? In the past 7 days, Strategy has bought over 40,000 Bitcoin, which is nearly 13 weeks of Bitcoin supply gone. But they're not alone. Metaplanet just announced that they've raised $500 million to buy more Bitcoin. Are these Bitcoin companies going to end the Bitcoin bear market early, or is this yet another bull trap? I'll get to my own personal opinion on this, but anyways, let's dive in straight into the source material. Let me pull this up. Here we go. Let's jump straight into it. So, very interesting post by a gentleman named Perception, or it could be a her. I don't know. But anyways, this awesome account named Perception, and it said, Bitcoin just broke above its 50-day moving average. I think that's a big deal. Best week since September 2025, up 8.5%, just hit 74K. And the correlation with tech stocks is weakening. So finally, we're getting... All right, cool. All right, guys, sorry about that. Anyways, so back to this. Guys, so... Let's talk about the supply shock, what we were talking about earlier. There's just not enough Bitcoin to go around, right? So the amount of Bitcoin that is actively being bought by Metaplanet, just Metaplanet alone, not Strategy, is more than the total amount of Bitcoin that is being mined. So just Metaplanet alone raised $255 million. That's enough for 3,500 Bitcoin. That's more than the entire Bitcoin issuance to be mined this week, 3,150, all from one company. Now add what Strategy will accumulate, the Bitcoin supply is going to get snapped up. So that's what we're talking about when we're talking about a supply shock, right? Now, going back to what I was saying earlier before we were having the audio issues, Bitcoin just broke above its 50-day moving average for the first time in 2 months. Best week since September 2025, up 8.5%, hit 74K. And that correlation with tech stocks is weakening. This is the thing that we've been tracking across 1,000 sources at BTC Perception for weeks now. Look at the narrative categories inside the platform. Narrative change surged to 28 trends in 48 hours, nearly tied with adoption at 29. When narrative change is that high, it means that the market's identity is actively shifting. Bitcoin spent 5 months being treated as a leveraged tech bet. That identity is changing right now. The new identity hasn't fully formed yet, but the data shows it's moving towards something that trades on its own fundamentals rather than as a proxy for NASDAQ. The last time a narrative identity shift showed up in our data at this intensity was right before the 2024 bull run started. So before we were having the issues, what I was making the case for is that this cycle has already performed differently. What do I mean by that? So this was the first cycle that Bitcoin made an all-time high before the halving. We also didn't have a euphoric blow off top. Most of the gains in Bitcoin came in the first 2 years after the halving. It didn't come on the last year, right? That is already different. That's already a change. We didn't have the notable euphoric blow off top. So we are already in uncharted territory. So if we're already in uncharted territory, if this Bitcoin cycle is already performing differently, is it too much of a stretch to say that the bear market will perform differently? I mean, look, the math is the math. The amount of Bitcoin that's actively being accumulated is more than the amount of Bitcoin that is being mined per week. And all of that, if you put all of that together, you know, it's the perfect ingredients for a supply shock, which is why we could be seeing the price run up as it's been running up. So going to Saylor's recent posts, he just continues to gobble up more and more Bitcoin. And the amount of Bitcoin that he's gobbling up, again, compare this to the amount of Bitcoin that's being mined per week, which is 3,150. Now compare this with the amount of Bitcoin that Strategy has acquired. Strategy has acquired 22,337 Bitcoin for $1.57 billion at $70,000 per coin. As of March 15, 2026, Strategy hodls 761,000 Bitcoin acquired for $57 billion at an average price of $75K per Bitcoin. Now, if you take a look at the Strategy tracker, I mean, ladies and gentlemen, Saylor has not been taking time off whatsoever. Let's just go to the year tracker. I mean, he's just gobbling up. He doesn't care. This latest purchase has been one of the biggest purchases. And honestly, it's been one of the best purchases in terms of the average price. As he did buy some at the top. He's getting Bitcoin right now at a 50% discount. But the most important thing, the thing that I want you to take away from today's episode is the amount of Bitcoin that's just being bought by Strategy and just being bought by Metaplanet is significantly more than the amount of Bitcoin that's being mined. So eventually one thing has to give, and eventually that supply shock becomes inevitable. This is not even mentioning Stretch. This is not even mentioning STRC, which again, we've been talking a lot about it. Last week, we were talking about it, how much of a successful product it is. The fact that, you know, there's a fixed income product that's offering a 11% yearly return is unheard of. If Saylor's theory of Bitcoin's CAGR is going to maintain this 20 to 30% moving forward the next 10 to 15 years. If that holds up, if that is true, they're going to be able to maintain this Stretch product. They're going to be able to maintain this STRC product. And with this STRC product, they're able to accumulate more Bitcoin with it. I mean, take a look at some of these purchases. On January 28th, they purchased 1,215 Bitcoin. On February 17, 1,158 Bitcoin. On March 2nd, 105 Bitcoin. On March 9th, 5,315 Bitcoin. On March 16th, 16,816 Bitcoin. So you have Strategy buying Bitcoin. You have the STRC product. You have sovereign wealth funds. You have Metaplanet. They're gobbling up all of the Bitcoin, and eventually there's going to be a supply shock. And unlike gold, that when the price of gold appreciates, the amount of gold actively being mined appreciates with it. Bitcoin doesn't work like that. The amount of Bitcoin that can be mined is set in stone, and every 4 years that gets actively cut in half. And that's why you have these crazy supply shocks generally the year after the halving. That's when the price of Bitcoin tends to go up the way it does. But I don't even think we need a halving supply shock. I don't even think we need a mining supply shock. With the amount of Bitcoin that it's actively being purchased, you're just going to have a natural supply shock. And also the fears of rehypothecation, the fears of paper Bitcoin. Eventually, even if there's more Bitcoin that is actively being sold than actively exists, eventually the math isn't going to math. So what do I mean by that? So let's say there's more paper Bitcoin than actual Bitcoin that exists. Let's say eventually people are going to add it up and they're going to say, wait a second, Why is there 25 million Bitcoin? That doesn't make sense. There should only be 21 million. That's going to cause a massive bank run. People are going to actively ask, to grab their Bitcoin, put it in self-custody. And what do you think that's going to do to the price? It's going to shoot it up so fast, the likes of which you've never seen before in your life. So all the planets and stars are lining up to cause the greatest supply shock I think Bitcoin has ever seen with this amount of Bitcoin accumulation. And this isn't even taking into account the sovereign wealth funds buying Bitcoin. I got a text, I can't specifically say from which bank, but I got a text from one of the big banks, a friend of mine that works at one of the big banks, and he was talking about, and this is one of the big conservative banks, but huge bank. They have trillions of dollars of assets under management, and I got a text from him, and he's saying Nico, we're actively launching a product to service the the Bitcoin space. And again, this is a bank that 6 years ago I was telling my friend about Bitcoin. He was essentially laughing out of the room. I love him, but he was like, look, this is too risky. It doesn't produce any cash flow. This doesn't really make sense for us. And then now he's texting me. He's like, look, man, we're actually looking to launch a product that is tailored for Bitcoiners, right? So again, this is talk about the perfect scenario, the perfect situation. And this is it right here, ladies and gentlemen. A supply shock is brewing, and it actually might be the catalyst for ending the Bitcoin bear market early. That could be the case. We don't know. I want to go through some of the comments, and I do also want to apologize again for the audio issues in the beginning of the show. Sorry about that, ladies and gentlemen. People are saying, is Nico bullish today? I mean, I am feeling a little bit bullish, but at the same time, I will say that, the halving cycles are intact until they're not. So, I don't know. I will say, fire Nico. People are giving me heat for the audio issues in the beginning. Sorry, guys. I don't know what was going on here. I don't have Opti. Opti's out of town today, so forgive me for that. It says some chats. Michael Saylor has had enough of your ass. That's hilarious. Nico is bullish now. Gold is down. Yeah, gold is down 8% on the month, down to Bitcoin. There's no reason gold and Bitcoin aren't much higher. Price suppression from the derivatives markets. I think that's a really good point. Yeah, 100%. I mean, this is what I was talking about when I was talking about the paper Bitcoin. 100%. You can see, price suppression from, essentially paper Bitcoin from there's more Bitcoin that's actively being sold and traded than is actually exists, right? But this is where Bitcoin's absolute scarcity comes into play. You can't do the same with gold. You can't say, oh, there's only so much gold in the ground. Eventually, if you start playing these derivative games, you know what's going to happen? Eventually, people are going to add it up and say, wait a second, there's 25 million Bitcoin, there's 27 million Bitcoin. That makes absolutely no sense. The math ain't mathin'. So next comment says the quickest way of U.S. debt is BTC. Why aren't our politicians embracing it? I think that's a really good point. So I think the reason that U.S. politicians are just not embracing Bitcoin, I think it has to do with incentives. Like ultimately, they were so fast to embrace the Genius Act, which again would perpetuate the US dollar in a worldwide scale. I think the reason that they've been kind of dragging their feet on the Clarity Act a little bit more is because Bitcoin fundamentally at the end of the day is a non-sovereign alternative. And the way that governments fund themselves is essentially by printing money. So, it's kind of like an incentive game, right? Like ultimately, if, governments want more and more people using fiat, they're not really incentivized to for their citizens to use something like Bitcoin. They're just not incentivized for people to do that. They're not even incentivized for their citizens to learn the truth about inflation. They're not even incentivized for their citizens to learn the fact that money can exist without inflation. They're not even incentivized to learn. They're not even incentivized for their citizens to learn that money right now is forced. You're forced to invest your money just to maintain your purchasing power, right? You don't have to do that. Bitcoin already solves that problem. Governments are really not incentivized for their citizens to find out those hard truths. So anyways, let's go through some more of these comments. Your money depends on fraud, paper, Bitcoin, bearish. Good morning, Nico. All the perma bears. Yeah, I mean, these are great comments. The disincentivization is because of banks. I mean, the banks is the bank thing is quite interesting. Like, we know for a fact right now at this moment that the reason as to why the Clarity Act is having such a hard time actually getting passed on a legislative level is because the big banks are having a problem with alternative financial institutions, let's say Coinbase or some of the other exchanges, offering rewards, right? And it freaks them the hell out because right now banks really don't offer interest on your deposits, even though they're making a fortune off of your deposits. So they're freaked out because essentially now they have competition, right? So it's not that Coinbase would offer direct interest back, but they would offer an incentive in the form of rewards. So if you leave your Bitcoin on Coinbase, or let's say you leave some cash on Coinbase, some USDC on Coinbase, Coinbase is actually offering you like a 3.8% yearly return, and then they pay you in Bitcoin. And if you look at Bitcoin financial on-ramps like River, they're offering you 3.8%, I think, or 3.5%. If you use US dollars and you leave it on River, they do offer you some form of interest, right? So the reason that the Clarity Act isn't getting passed right now is that banks don't want competition. I mean, I see it someone comment here, basically saying the quiet part out loud as the reason as to why they're not doing that. Anyways, is sitting on Opti's chair making Nico bullish 100%. So Bitcoin 100K again in 10 years. Got it. No, I think it's going to be a lot faster than that. Could you tell us more about the banks, please? I mean, the banks right now, I'm going to get to this in just a little bit when I talk about the Clarity Act, but the way that you have to see the banks is that they don't want competition. And what Coinbase is doing, what a lot of these new banks or these new on-ramps and exchanges is that they're incentivizing their users to leave stable coins on the platform, and then they're giving quote unquote rewards for leaving stable coins on those platforms. So, and that is obviously superior to what banks currently do. So what banks currently do is that if you leave $100 or $1,000 or $10,000 on a bank in a bank, they're giving you like 0.38%. Like the interest rate is minuscule. It's tiny. It doesn't even make sense, right? So they're freaking out because essentially what Coinbase and all these platforms are doing is saying, listen, if you leave some USDC on our platform, not only will we pay you interest, but we'll pay you interest in Bitcoin. So obviously the banks are like, wow, people are just going to take out their deposits from the bank, and they're just going to leave it on these platforms because the platforms are offering a superior product. But this is the basis of capitalism. This is how it's supposed to work, right? Like, this is how things are supposed to work. So the fact that the banks are not willing to compete in the free market, they're trying to use the heavy hand of government in order to stifle their competition. That's not capitalism, right? That's crony capitalism. That's using your connections in government to try to strong arm your competition, to try to regulate your competition out of existence, right? But what does this tell you? This tells you that we are winning. The flak is heaviest over the target, full stop, right? So anyways, we're going to talk a little bit more about that later on in the show. But before we get to it, I do want to start the show. I want to jump into it. We have tons to talk about. We have a clip from the CFTC regarding the Clarity Act, regarding the market structure. So we have it's the chair, the CFTC chair and SEC chair, talking about how agencies are ready to implement Bitcoin market structure rules as soon as the Clarity Act becomes law. And then I'll tell you guys the percentage, the probability that the Clarity Act gets signed into law in 2026. Currently, it's sitting at a higher number, but again, the time is running out. There's a high probability right now, high probability that the Democrats win the House in November. If the Democrats win the House in November, there's a very low likelihood that any type of pro-Bitcoin legislation, pro-crypto legislation gets passed. So, you know, the clock is running out. They better pass this. And they have full support from the White House. The White House has come out many times, including Treasury Secretary Scott Bessent, and they've come out for the Clarity Act. And the Trump administration has also even called out the banks for trying to stop the Clarity Act. So it's going to be interesting to see how all of this plays out. But anyways, guys, no more delay. Let's jump straight into the show. We have tons to talk about today. If you guys are enjoying the show so far, make sure to smash that like button. We're going to be right back in just a bit. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody. We are back. At the time of recording, the Bitcoin price is $73,790 sats per dollar, 1,355. Block height 940,918. Realized monetary inflation 0.83%. Market cap 1.48 trillion. Bitcoin versus gold market cap 4.93%. Percentage issued 95.25%. Decline from all-time high negative 41.5%. So right now you're getting Bitcoin at a 41% discount if you are buying the dip, which I highly, highly recommend. Guys, I mean, think about all the things that I just said in the beginning of the show. I mean, supply shock incoming. The amount of Bitcoin that's actively being bought on a daily basis is more than the amount of Bitcoin that is being mined on a weekly basis. Like, this isn't rocket science. Eventually, something's got to give. Even if you talk about the derivatives, even if you talk about paper Bitcoin, it doesn't matter. Eventually, people are going to realize. Let's play devil's advocate. Let's talk about the rehypothecation. Let's just say they're going to go down the route. They're just going to sell more Bitcoin that currently exists. You know what's going to happen if they do that? Eventually, the math ain't gonna math. Eventually, people are gonna realize, hey, wait a second. Why is there, they're gonna add it up, and then it's just like, why is there 25 million Bitcoin? Why is there 30 million? That doesn't make sense. There's only supposed to be 20 million Bitcoin or 21 million Bitcoin. What's going on here, right? The moment that happens, you know what's gonna happen? Huge, massive bank run. Right? And the people that have self-custody, they're going to look back and they're saying, oh man, this is great. It's great to have custody of my Bitcoin. And then the institutions that have been selling more Bitcoin than they actually have, you know, they're going to freeze withdrawals, right? But what's going to happen to the price? The price is going to shoot to high heaven, right? So, and then, okay, so that's the worst case scenario. That's a derivative scenario. That's the paper Bitcoin scenario. So that doesn't even have me worried. But let's talk about the other side of the coin, which is, again, Michael Saylor and Metaplanet, just those two, not even taking into account the sovereign wealth funds, they're buying more Bitcoin, that just them two, than the amount of Bitcoin that is actively being mined on a weekly basis. What's going to happen there? The equation's quite simple, ladies and gentlemen. Anyways, let's talk about the Clarity Act, shall we? So, we've been paying close attention to the poly market odds. The volume's quite high, so there's a lot of people that have money on the line. $385,000 in volume since January 1st. So people are making big bets on this. Currently, the betting markets have it at 61%. It gets signed into law in 2026. If it doesn't get signed into law in 2026, probability that it gets signed into law when the Democrats take back the House, if they take back the House, is quite low. So we're going to stay on top of this. This would be a big win for the Bitcoin space. It would enshrine into law the protection of the right to self-custody, which in my opinion is already protected by the Constitution, but this would be a double guarantee, right? But again, the banks don't want this to happen. They don't want this to happen. They're not a big fan of this law. They don't want competition, and they're not willing to play fair. They're not willing to play by the free market rules. They're willing to lobby the government in order for the government to protect their moat at the cost of the American consumer. Is this a government that's by the people for the people, or is this a government that's by the people for the banks, right? We shall see. It's interesting how Bitcoin exposes incentives, isn't it? Anyways, here's a clip from the CFTC and the SEC chair talking about how the agencies are ready to implement the Bitcoin market structure law. Let's check it out.
A big piece of my agenda has been crypto, our crypto asset markets. As you all, I'm sure, are tracking, there's some legislation that we're really hopefully working with David Sachs to get across the finish line and the president. But that's going to be a key piece. So the CFTC would have a broad amount of authority over the spot markets, and we're getting ready to implement those rules should the legislation get across the finish line.
So, I mean, you heard it from the horse's mouth himself, right? They're ready to go. They're ready to move on this. And this is something that the Trump administration has been actively lobbying for. They've not only been lobbying for it, they've been actually calling out the big banks. They've been saying, why are you getting in front of this? Why are you trying to stop this? This makes no sense. What's going on here, right? So it's interesting how Bitcoin exposes incentives. Of course, I have to give a shout out to Coinbase. I'm not a big fan, but I have to give a shout out to Coinbase. Coinbase has been putting a tremendous amount of effort in DC trying to lobby and get this bill across the finish line, but it only makes sense, again, if it makes sense for the industry. However, I will say this, the reason that Coinbase isn't treating this like a life or death situation is because ultimately Coinbase is already offering these rewards already. So if you hold USDC on Coinbase right now, they're already offering you Bitcoin rewards, which is really just Bitcoin interest, right? So if you hold USDC, they're offering you a certain amount of interest on a yearly basis, and they pay you that interest in the form of Bitcoin. That's already way better than the banks. Not only do you have to pay the monthly maintenance fee, which is like $10 or something, or $10, $15, but they're also not paying you for when they use your money, because that's how banks work. You put your money into a bank as a form of a deposit. That bank now then takes that money and then lends it out to someone else. They make interest on that. That's how banks make money, and you get nothing in return. That used to not always be the case. Banks back in the day, they used to pay you for holding your money. That's how it should work, because ultimately they're making money off of your money, right? It's not like the money just sits there in the bank. No, they go and loan it out. Right? So this is where banks, again, they're not playing in a free market type of way. They're not, capitalists. This is crony capitalism 101. Let's see how all of this plays out. It exposes incentives. This tells me that banks are scared. Like they don't know how to handle this. And this tells me that, again, stable coins are going to continue to propagate not only in the United States, but worldwide. They're just a more efficient way of payment. Think about that. They're just significantly more efficient. And I think stable coins, like I've always said this, I had some interviews in Lugano and I talked about this as well. Stable coins are a Trojan horse for Bitcoin. And the reason for that is ultimately a stable coin gets people exposed to a system outside the traditional banking system. But it doesn't solve the inflation problem. So stablecoins don't solve the savings issue. It doesn't solve the inflation issue. It doesn't solve the censorship issue. It does solve the payments issue, 100%. So think about it. Someone who's used to been using the traditional banking system, they have an account with one of the big banks, right, et cetera, et cetera. And all of a sudden, they download a wallet, and all of a sudden they're able to send $100, $1,000 to, their family member across the ocean. It's instantaneous. It's an open blockchain, so they're able to audit, say, look, the money was sent. It doesn't get stuck in this like limbo, which is how the current wiring system works. No, it's instantaneous payment. You see it, you could receive it, and then you have custody of the of that said stablecoin. But again, it doesn't solve the inflation issue. So what happens once they start asking the question, what is money? Since they already have exposure to digital wallets and digital assets, what's the natural step? Eventually, all roads lead to Bitcoin. So I'm very curious to see how, the Clarity Act is going to be implemented. And if it gets implemented, I'm very excited about that. We'll stay on top of it. We'll see if it gets across the finish line. But it's so funny. It's so fun. It tells me that we're winning, right? When the big banks are the ones kind of freaking out and they're saying like, oh my God, like why is this not why is this not working? Like why is this stuff not getting passed? Why is this stuff not getting passed, right? Or better said, we should get involved and make sure that this stuff doesn't get passed, because it could potentially, put our business model at risk. Anyways, I find that interesting. Anyways, guys, it's gonna be a hell of a show. We still have tons of stuff to cover. We're gonna be right back in just a little bit. We have a lot of things to talk about. We'll be right back. I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Ledin lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys. And not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledin has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY. All right, everybody, we are back. So I'm not the only one to talk about a supply shock, ladies and gentlemen. Check out this Forbes article. Time is running out. Bitcoin is suddenly braced for a surprise price shock. So again, lots of people thinking the same thing I'm thinking. And also we got our special guest who just dropped in. We got the one, the only. We got the co-founder of Ledin, my brother in arms. We got Mauricio joining us today. Mauricio, how you doing, bro?
I'm doing excellent, man. It's always a good day on Simply.
Dude, thanks for joining us. Huge news from Ledin, by the way, ladies and gentlemen. We have Mauricio to break it down because it really, really is a game changer, not only for Ledin, but for the entire industry as a whole. Mauricio, I'm going to give you the microphone just to kind of explain what this is. So I'm going to tee you up. Ledin closes a $188 million Bitcoin-backed bond deal. Mauricio, how big of a deal is this, man? What does that mean? Why should people be paying attention to this?
This is a very big deal. It is a very big deal for the Bitcoin credit market structure. It is a big deal for Ledin, and it is a big deal for TradFi. This is the first time a Bitcoin company has ever issued a Bitcoin-backed loan, ABS, that is an asset-backed security. And that effectively creates what many of us know as a bond offering. And this bond offering was the first one of its kind to ever be issued. It was the first time S&P Global has ever rated a Bitcoin product. And it was the first time S&P has issued an investment-grade rating to a Bitcoin product ever. As a first-time issuer. So Ledin was the first company to ever basically put a bond like this in the market, and a testament to how much TradFi is beginning to understand and wants to participate in this industry is the fact that as we were selling the bond, or as we were pitching the bond to institutions, the market was correcting, as many people already know, in February, early February, from about 80 to the 60s. And this was a moment in time where people that were investing into this asset class for the first time, they had questions. They had questions around How will Ledin's risk engine work if there's a drop in Bitcoin price? Will the systems hold? Will everything work as planned? And coincidentally, this was happening as we were pitching the deal. And not only did the rating not change from S&P, not only did the deal close in the time we expected it to, actually sooner, but the deal, with all those things considered, was more than 2 times oversubscribed. And I think this highlights how much appetite and demand is in the institutional space. But the other most important part of this whole thing, and why I think it's so key, if we all believe, as you and I both do, that Bitcoin will become a multi-trillion-dollar asset in the future, say $3 to $5 trillion in a few years, we believe that Bitcoin-backed loans, borrowing against that same Bitcoin, will also become a $1 trillion market. Well, then the question is, where is $1 trillion going to come from? What market is deep enough to access that amount of dollars? And the answer is US public debt markets, right? The ABS market that we just tapped into is a $3 trillion market. And it is the first time that a Bitcoin company has ever tapped into that. And Ledin is effectively already tapping into that liquidity and turning around and distributing it to Bitcoiners that don't want to sell their Bitcoin. But to layer on top of that is the fact that in that $3 trillion ABS market, there is 80% of those bonds in that market are investment grade rated bonds. Only 20%, an estimated 20% of ABS bonds are non-investment grade, which really means that if you want to tap into that market in a scalable way, you have to deliver an investment grade rated product. It is very difficult to achieve an investment grade rating. It is the top of the mountain in terms of debt. And to pause this monologue for now, I can get into why Ledin is so uniquely positioned to be one of the first companies, I would argue probably one of the only ones, if not the only one, that can issue an investment grade rated product into this market. And we can break that, but I'll pause for now.
I mean, first of all, Mauricio, that is incredibly exciting. I mean, the way that I'm seeing this, Mauricio, is like, this is just further legitimate, not that our industry needed this, but it's further legitimization of our industry in the eyes of traditional finance. Like, man, I saw you on the floor of the New York, like you were called in, I think it was from your studio, but you were called in to, you know, a traditional financial show the other day. So the way that I'm seeing this as a Bitcoiner, man, you know, 5 years ago, we were written off. We were not taken seriously. You heard all the headlines, basically, look, the Bitcoin's an index for money laundering. I mean, you've heard the countless things that they would say about us. And now the fact that you guys are getting a BBB rating, and not only is the bond offering, not only was it successful, it was oversubscribed. Man, this is the legitimization of Bitcoin as an asset class within traditional finance, and you guys are leading the way. Am I reading that correctly?
You are reading that correctly. And I would say, and I would argue, I'm going to take a bold statement here, but I believe that what Ledin's ABS offering will have a similar impact into Bitcoin credit, Bitcoin-backed loan credit markets, as Michael and Strategy's preferred and convertible bonds had in the equity markets. Again, I want to highlight some very important differences between other institutional products that have been offered around Bitcoin in the past, i.e., Strategy's preferreds or Strategy's convertible bonds. In those offerings, you were always taking Bitcoin price risk, some form of Bitcoin price risk, because you were either buying equity in the preferred stack of strategies, which is basically a Bitcoin treasury company, meaning you are taking Bitcoin price risk to get that yield. As the better Bitcoin does, the better strategy does, and therefore your yield is impacted. Similarly with the bonds, and similarly with offerings from such as Coinbase corporate bonds. So again, to highlight this, corporate debt is very different than the SPV which is issued. But to highlight the differences, the corporate debt from Coinbase and from Strategy to date, none of it has been able to achieve investment grade ratings, right? None of this is the first Bitcoin bond ever to receive investment grade, including all the ones that came previously, including Strategy's bonds, including Coinbase's bonds. Now, again, as I mentioned, they're different corporate they're different vehicles, what's getting rated, but it's still very a very important difference. When you're investing in Coinbase, when you're investing in Coinbase bonds or in Strategy's bonds, like I said, you are attaching the fate of that investment with the performance of the underlying asset or Bitcoin or, in the case of Coinbase, a casino of tokens. But what I will say is when the Ledin offering actually does not have Bitcoin price risk because our investors are just getting to clip a return on the dollar investment they make into the bond. You could argue that there is an element of Bitcoin price risk if Ledin isn't able to liquidate the loans in time, but that is exactly what S&P spent a year digging into and stress testing and why they arrived at the rating that they did. So again, this is a truly unique product. It is a very revolutionary product, and it'll have an impact that I think is a lot of people still don't quite understand how transformative this is because they might not have the context. But again, I do think that this is going to create a revolution in the funding model for Bitcoin-backed loans going forward, because this is the most transparent, resilient, and scalable way of accessing financing for Bitcoin-backed loans. Ledin clients now know and can see it as a public offering. They can see how many loans are vended into the S&P facility. They can into the bond facility. They can see who the custodian is. It's Fidelity. You can see the rate that we pay. Like I said, you cannot get more transparent and more scalable than this.
Yeah, it's massive. It's massive. It's a complete game changer for the industry. And again, the legitimization factor, I can't emphasize that enough, because for the longest time our industry was just counted off. It was like these crazy guys. And then I actually got a text, Mauricio. I don't want to be specific in terms of the bank name or whatever, but I got a text from someone high up in one of the big banks, and we went to school together, and he was basically talking to me about, like, they were about to launch a Bitcoin related product. And, this is the type of person that, 5 to 10 years ago, I was talking to him about Bitcoin, and he was just writing me off. He's like, no, this is crazy. Like, this is for all of these bad things. This is not real money. And now he's getting excited. He's like, look, we're thinking about launching a product, with Bitcoin, behind it. Right. And I'm like, wow, this is a complete game changer. Now, I want to know how you feel, my friend, because I know how much you work. You've built this with your bare hands with your co-founder, who's also awesome, by the way. How do you feel, dude? 2018 till now, do you believe that? Are you still comprehending this? Right, you come from very humble beginnings, right? I know your parents; they're awesome, right? And you came from Canada, right? And you've reached this level of success, Mauricio. You personally building a Bitcoin collateralized loan business the right way, which is why you were able to survive the massive collapse that happened with Celsius and BlockFi and all this. How are you feeling right now? How are your emotions dealing with this, my dude?
I'm incredibly happy. I'm incredibly proud. I feel immensely proud of the team. Keep in mind, Ledin is a team. Ledin isn't me, and isn't just me and Adam. And I want to make sure that I'm giving credit where credit is due for the amazing people we have at Ledin. I want everybody listening to know that this isn't just me or Adam that are living and breathing this thing. We have a team of 70 plus of the most amazing Bitcoiners I've ever met. And we come in every morning, ride or die, rain or shine, to do everything we can to build the best Bitcoin backed loan product ever. That's all we do. That's literally all we do. And that's all we've been doing for 8 years. And what I would say is what I take away from this is that you have to put in the work. The reason Ledin is able to do what we're doing today, the reason we were able to get rated by a company like S&P is because we've been doing this for 8 years. When you're looking at bond offerings like this, they want to see history. They want to see a track record. And I know 8 years might sound like a long time for us Bitcoiners, but in TradFi, 8 years, you're an infant, right? And so we're here because we have 8 years of perfect track records. And the 8 years that I'm mentioning and referencing for that perfect track record were not glamorous years. We're talking 2018. We're talking being laughed out of the room. We're talking being ridiculed after the COVID crash. We're talking about people questioning whether lending was ever going to be a thing after FTX. We've overcome, and the thing that makes me the most proud is that we've never veered from our goal in down markets or in up markets. In up markets, you always have this temptation to add new things, to add new speculative assets, to do more, to make more money, right? That's the kind of shiny lights that in this industry as a founder, the hardest part is to be able to stay disciplined and focused. Because the more you start doing things, the more complex the business gets and you lose sight of the goal, right? And so at Ledden, we've only been doing Bitcoin-backed loans. We've never pivoted. We've never changed. That's all we've done for 8 years. And it's that conviction, that dedication that has got us to where we are today. I would say that a big part of why we were able to do this offering was, again, because of our track record, because of our track record of doing things right. From a risk management perspective, from a compliance perspective, we have a perfect track record from a legal and compliance perspective. I don't think there's many other Bitcoin companies that can say that, right? And the same goes for risk management and liquidations, right? We have a perfect track record of Bitcoin-backed loans in over 8 years. Blockfields just went under today, right? Like another one, right? And I know that just sort of rolls off your tongue, right? When you say, oh, 8 years. 8 years doing Bitcoin-backed loans and still being here is saying a lot, right? Many of the companies you're seeing here or today, or you're seeing on these ads, they're probably 1 or 2 years old. Those products cannot be longer than 1 or 2 years old, right? And so, yeah, it looks great, but as S&P and other ratings agencies will tell you, it's about consistency over time. It's not about how great you look in this moment, right? That's how a lot of people, looking great gets you excited, gets you convinced, makes you put your guard down, right? That's why all these new companies are trying to come out, with these crazy, outrageous offerings. And if you're looking at stuff that doesn't make sense, it's hard to say, man, this looks too good to be true, right? Like when you're on the other side. But there are things that are too good to be true, and they are still out in the market today. I don't think Blockfields will be the last Bitcoin lending company to have issues. I think you're going to see more and more of that, especially as competition heats up and they try to get more and more aggressive, right? We've seen this movie before, right? And we're not here to maximize what we can get the next quarter or bump up our AUM so we can get a better valuation. Like, that's not the game we're in. The game we're in is giving you the dollars you need today and keeping your Bitcoin safe. And I know if I do that right, that Bitcoin that you gave me today for that loan is going to be worth 10 times more in 2-3 years. And if I do my job right, next time you need a loan, where are you going to go? You're going to come back to me. So to me, I got in at the lobby ground, at the lobby level with the Bitcoiners, right? I want to grow with them. I want us all to grow together. That's how we all win, right? I don't win if you guys don't find benefit from your Bitcoin-backed loans, right?
Absolutely.
And so the better you do, the better I do. And that's the beauty of having aligned incentives, right?
Absolutely. Absolutely. Now, Mauricio, I do want to ask you, and I, you know what, I'm going to save this for after the break, but one bond related, question more. Where does this go from here? Do you expect other Bitcoin collateralized companies, Bitcoin collateralized loan, Bitcoin loan companies to follow suit, or is Ledden uniquely suited to offer this because of the way that you guys conduct business in terms of the proof of reserves that you guys offer, the ways that you guys have operated for so long? Is Ledden uniquely positioned to have this type of rating, or is this something else that other companies are looking at and saying, hey, we should probably follow suit? Or are they just not structurally able to do something like that?
Both are true. So I would say that number one, Ledin is uniquely positioned today to offer this product, and I'll break down why. To offer a product like this, you need size. Our offering was $188 million, but we need to have multiples of that in terms of loan inventory in order to continue vending loans into that facility as some loans get repaid, right? So you need to have a book. The minimum offering size for this market is in the hundreds of millions of dollars. So you need to have multiples of that in order to have the right size to achieve one of these offerings. So just on a size perspective alone, we are the only, I believe, consumer Bitcoin-backed lender that is at the size that we are, right? Like, Ledin is like north of $750 million today, the size of our book. I don't think other people have that size in those quantum levels. But more importantly, others might have the size in the institutional world. You might have $500 million loans. The challenge is bonds don't like concentration, right? Like if your $100 million facility, or if your $500 million facility is just 5 guys, that's a big problem. So what makes Ledin unique is that those $200 million are made of thousands and thousands of clients, right? And we have other thousands and thousands on the other side that we keep vending in. So you need to have the size and the distribution of that size, right? Like you need to have that size to be broadly distributed, right? That's the other one. The third one is you need an 8-year track record, right? Like not many companies have a perfect 8-year track record, which is another gating item. And the last one is our regulatory posture. Ledin has a squeaky clean track record. We've never had issues or fines. I don't think many other companies can say that either, right? That said, what we have done is revolutionary in the sense that we've tapped into a $1 trillion market. We could presumably or hypothetically continue originating hundreds of millions of dollars every month and keep going into the ABS market and selling off all that inventory into the ABS market, right? That is the most scalable way of doing this. And the more you do that, the better the rating gets, the better the cost of the capital gets, and it becomes this sort of virtuous cycle, right? And so I think that this is going to be the top of the mountain as far as funding, and others are going to have to basically get themselves in shape to get into the market. I agree.
Is there a first mover advantage to this as well, Mauricio? The fact that you guys were first to achieve this, what is the significance of that?
Absolutely. It is, like, as you'll read, and don't take it from me, everybody can go and read this, but when you do anything in life, right? The first time you do it, you're the newcomer into the market. People don't know you. You don't have a history. There's no precedent. A product like this has never been done. So people have to wrap their heads around it so they can better price the risk, right? The more you're interacting with something, the better you can assess the risk, right? And the better you can price that risk. And so, again, if you're the first to the market, if you were the first deal everybody looked at, everybody found out about the product through you, you have a really good chance at continuing to make that better, right? Is there a guarantee that you're always going to be the best in the first? It's not a guarantee, right? But we were the first ones to break it, and we have basically all hands on deck to be the leaders, not only in Bitcoin-backed loans and originations, but loans have two products. Loans have two clients. There's the person borrowing the money, the person you're originating the loan to, but then you have to go source that money. Both have to be able to scale. If you do originations, but you don't scale the funding, you don't have a loan. If you scale the funding, but you have no originations, you don't have a loan. If you have scalable funding and scalable originations, you have a world-class company. That's what we're trying to build.
I love it. Love it. All right, everybody, we're going to be right back after the break. We're going to be talking about Ledin. And I'm going to be a little bit biased here, but guys, usually, getting a loan when Bitcoin's 50% down might not be a bad idea. I don't know if Mauricio could say that, but I could definitely say that. We're going to be right back in just a bit. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com. All right, everybody, we are back with Mauricio. Mauricio is the co-founder of Ledin. Mauricio, I'm just gonna be blunt and say it because I could totally say it. Usually taking back a Bitcoin back loan when Bitcoin's 50% down, ends up being a really good idea if you look back into the future, right? Usually taking out a loan, towards the top, it comes with more risk. If you're able to manage the LTV, you're fine. But here, taking a loan at these levels when Bitcoin's 50% down from the top, it's near the all-time high of 2021. It definitely comes with less risk. It doesn't mean it's risk less, but it definitely comes with with less risk because Bitcoin's already down, 45%, right? So from like a historical basis, these are the times where I'm looking at it and I'm saying, again, it tends to be a lot more attractive. And again, whether it's, getting Bitcoin to buy or taking out a loan to buy more Bitcoin or, taking out a loan to, fund your lifestyle, right? Whatever that is, or grow your business or whatever it is. So I want to get your thoughts on this, Mauricio. What have you seen from your end? Like, have people been more excited? Have people been taking out more loans now that the price of Bitcoin has been down? Have people been, taking this time to close out the loans, to pay off the loans? I want to get your take.
Definitely, and happy to share what we're seeing. So what I would say is, as of February, the move in February, I think was surprising to a lot of people, myself included. I did expect some downside, but I do think that we went further than I think myself and others expected in terms of the price. I did notice in the I want to say the sort of tail end of February, that people were in this sort of, we don't know how much lower we're going to go mindset. And they were sending extra Bitcoin to their loans, sometimes making partial repayments. Some people like fully repaying the loans, and taking the Bitcoin out to self custody. And this is normal behavior in this type of market. And again, anecdotally, I say this because I speak to our clients pretty much every day. That's what I do. And so I would say that I did sense a shift as of, I want to say about 2 weeks ago, where, what we typically see during these types of cycles is, markets are coming down. Of course, this triggers a big rush for people to start sending Bitcoin, repaying loans. We did see some liquidations back on February 5th or 6th. And after that sort of subsides, after we reach the low and the price kind of settles, that there's like a period, I want to say there's like a 1 week period where people are still, maybe it's PTSD, maybe it's sort of recency bias, but they're still looking down and trying to say, well, okay, if I send this much Bitcoin, I'm good until 40. If I send this much Bitcoin, I'm good until 30. So they start basically like, planning worst case scenario, and they look at they look down. They start looking down as opposed to looking up, right? What I noticed as of, I want to say again, 2 weeks ago, maybe last week was a bigger sort of a big shift, but the sentiment seems to be shifting away from, how much lower are we going to go, to, I think we're basically going to start, the market's going to turn around and people are starting to look up again. They're starting to say, okay, I'm happy to take loans at these levels. I feel comfortable taking loans at these levels. I think a lot of it, or some of it, one of the big changes also in terms of sentiment was when Bitcoin held after the US attacks on Iran. I think that one, and it was the case for me too. When I saw Bitcoin holding up in light of these recent attacks, I said to myself, my thought to myself was, okay, the sellers are basically exhausted. You know how they play that meme, like the sellers are exhausted, and they put those two guys like working out and they're throwing the balls, and like the sellers.
Yeah.
But I actually think that when I saw that in the context of the Iran attacks, that was one of my first sort of moments where I said, okay, the sellers are exhausted, right? This seems like everybody that was going to get forced sold or liquidated, that got flushed out. And what I'll say, the other thing I'll say in terms of the nature of these events is that most often the people that end up selling, near the lows aren't usually willing sellers, if that makes sense, right? Like these are usually people that are forced sellers either because they got liquidated or they got overstretched or some other part of their portfolio got hurt and they had to come and sell it at a price that was less than optimal. And so what I'll say is, like, once you flush out all those unwilling sellers, all the willing sellers are also gone, and therefore the imbalance shifts to, okay, there's not enough Bitcoin left to buy of the people that want to get in. And I think we're starting to see that now. Bitcoin is dancing or flirting with 74. I think if I see a weekly close over 75, I'm going to feel a lot better. But I do like the price action I'm seeing recently.
Yeah, and I was talking about this earlier, Mauricio, that this cycle, it was very different. And the reason that it was very different is because we had an all-time high before the halving. Most of the price action, most of the price appreciation happened in the first 2 years rather than the third year, which is historically usually when you see that euphoric blow off top. We didn't see that this cycle. What we saw was most of the price appreciation happened in the first 2 years, and then the all-time high being reached before the halving, right? And of course, you can say that had to do with the ETF, but my basic thesis is look, if the Bitcoin cycle performed differently from a price appreciation perspective, why wouldn't it perform differently from a bear market perspective, right? And I think that is something that could catch a lot of people off guard, because I think a lot of people are bracing for that traditional bear market, and then connecting that with what I was talking about in the beginning of the show, in the hook, there's a supply shock that's coming. I mean, the amount of Bitcoin that I'm not even talking about the sovereign wealth funds. I'm not even talking about, big players, just talking about Strategy and Metaplanet. The amount of Bitcoin they are buying versus the amount of Bitcoin that's being mined on a weekly basis, they're buying magnitudes more than the amount of Bitcoin that's actually being mined. Right. So eventually something's got to give. Eventually you will have this type of supply shock type of situation, and you might see Bitcoin, appreciate in a moment that you don't expect. Right. All the ingredients for that to happen are all being lined up. I mean, the amount of Bitcoin they're purchasing. Saylor just made one of his largest purchases in a very, very long time. I think it was $1.57 billion. And usually when he made these purchases, they were towards the top. This is one of the first purchases, massive purchases he's made when Bitcoin's gone down like 40 to 45%, right? So I don't know how much you believe in that theory, Mauricio, but I do want to get your take, because this is a big theme of today's show, is this idea of a supply shock, man, because they are buying massive amounts of Bitcoin.
I echo a lot of what you said, and I've been looking at that data as well. I think that not just you, I've heard that from several of my clients already, and some of my friends in the industry, just this imbalance between the pace at which MicroStrategy and others are acquiring Bitcoin versus this sort of pace at which Bitcoin's getting mined. And others can see that delta, right? Obviously, how this resolves and when this gets resolved, nobody has a crystal ball. But like you, I think that if I just look at the setup, right? The setup is you have institutions that are just buying Bitcoin hand over fist at a faster clip than the Bitcoiners are mining it. Alex Leishman from River did a great presentation at Strategy for Corporations, where he's highlighting the difference in consumption or basically demand patterns between institutions and individuals. And he's basically highlighting that institutions and businesses are buying Bitcoin. But Bitcoin's trading hands from the institution, from the people that got in early to the institutions that are now getting in with a much longer term horizon, right? Like if you look at early Bitcoiners, you got into that asset 12 years ago, 14 years ago, call it, right? Let's say you got into that asset in your, early 30s, right? You're now mid 40s, looking at 50. Your life's changed quite a bit, right? Like you're no longer in this aggressive accumulation stage. You're probably already thinking about, oh, well, I'm going to set some things aside for my kids. Like your mindset changes. And I think from a demographics perspective, it makes a lot of sense that a lot of the individual Bitcoiners today have created massive amounts of wealth for them. They want to realize some of that wealth. That's why Bitcoin-backed loans are exploding. That's why you're seeing a lot of those volumes of individuals selling and institutions buying, because individuals are basically having their liquidity event, right? I think there was a big piece on that a few months ago, and I do subscribe to that thesis. So I agree with you on the sort of impending / imminent supply shock. In terms of timing, what I hear from some of the smartest guys I follow and I'm friends with is I like to look at people's incentives equally as I do numbers and math and liquidity. And why do I say that? I say that because we have a midterm election in November in the United States. Historically, markets tend to do very well leading up to said elections, unless there's some type of exogenous shock or something that the incumbent government can't really control. But being that we are going to be, going into the U.S. midterms, Trump, has been, shown to do whatever he wants, or, a lot of the stuff he wants, he just gets done. I would not be surprised if we saw a big concerted push to get markets in a really good place or in good shape leading up to the November midterms. And I think if you overlay that to sort of liquidity cycles or Bitcoin halving cycles, a lot of the signs are pointing to a great sort of summer / fall for markets. And equally, a lot of people are saying, well, market peaks at midterms and then we roll off from there. I'm not sure, but I think that we're going to have a good few months for markets from now onto the midterms.
Absolutely. I mean, it all boils down to incentives, right? And they are incentivized because they want to hold the house ultimately, right? And a big part of Trump's voting demographic, whether he likes it or not, are the Bitcoiners, right? That's really what moved the needle. You could make the argument that that's really what allowed him to win the previous election. You can make a very strong argument about that. So obviously, he's kept all his promises from Bitcoin 2024. The only promise he hasn't kept is Bitcoin hasn't yet gone to the moon. So maybe President Trump could pull that off this year. Anyways, before I do wrap up the show, I do want to give a very special shout out to one of our sponsors. And I know Mauricio's going to be there. I'm going to be there. Bitcoin 2026. It's April 27th through the 29th at the Venetian Hotel. I call this Bitcoin Super Bowl weekend. You guys don't want to miss it. Mauricio, are we going to still do something special? Big announcement? Do we have it cooking?
We are. It's going to be a pretty amazing story. And I just think I like continuing to, as it happens to me, right? Like sometimes I'm talking to our clients and they're telling me the stuff they're doing with the loans, and I am blown away. I'm blown away at how incredible their projects are, and not just from a financial perspective. And this is what I think we're going to highlight in Vegas is not every loan goes out to machines and computers and businesses and making more money. A lot of it is very personal, and so I'm excited to share this with you in Vegas.
Absolutely. It's going to be great. It's going to be fantastic. Guys, you don't want to miss it. Use promo code SIMPLY. Again, promo code SIMPLY to get 10% off. Guys, love you all. Thank you guys so much for tuning in. Go check out Ledin. If you guys use the link in the video description, you get 0.25% off your first loan. Mauricio, stick around for a little bit. Love you guys. We'll see you on the next one.
Today's episode was Brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.